Good morning, everyone. Jim Fitzpatrick. Thanks so much for joining me right here at CBT Now on the CBT Automotive Network. Buying or selling your dealership comes with high stakes. Today, we're getting practical advice for anyone looking to navigate today's buy-sell market, which is a very interesting one to say the least. Joining us with what you need to know is co-managing partner of Bel Air Partners, Todd Berko. You've seen him here before on CBT News. Todd, thank you so much for taking the time of your schedule to join us on the show once again.
It's my pleasure. Thank you very much for having me.
Absolutely. So lots of craziness going on out there, or I should say the perception of craziness going on out there. So with all of the talk of tariffs, everyone is talking about the uncertainty in terms of pricing and vehicle production and profits, and kind of the natural assumption is that the buy-sell market would be affected, yet that may not be the case. Why do you think that is?
Well, I think, first of all, the first issue is the major driver of deals coming onto the market is dealers aging, wanting to change what they do with their lives, not having a succession plan. That doesn't change regardless of what the economic circumstances are. So deals are coming to market. Also, buyers recognize that there's a lot of noise going on, and the real talent in business is knowing what's noise and what's reality.
Right.
And dealers have a view on that. And they recognize that car dealerships are long-term assets, and you can't let long-term decisions be based on short-term economics, or at least not completely so.
Very good point.
Think about it this way. Dealers have faced uncertainty before. You had the Great Recession. You had all those disruptors who were supposedly going to drive car dealerships out of business. Dealers have basically subsumed the best part of their business plans, and it prospered. So these guys, they survive.
Yeah.
The dealership model survives. And the other point is that buyers, they don't trust anything they can't control.
Yeah.
So if you don't buy a car dealership, is buying a stock in the stock market, is that any less risky? But you have no control over it.
That's right.
So they still want to own dealerships.
That's right. Yeah, it's a very good point. And as we saw through all of the different changes in the marketplace that you mentioned, there were so many good things that came out of those times as well, right?
Oh, yeah. I mean, think about it. People now have better control over their inventories, leaner management teams.
Yeah.
The larger groups have used technology to basically cut costs. I mean, nobody spends money on the newspapers anymore.
That's right.
Things get titled more efficiently. So they're becoming more efficient and they're becoming more profitable. And that's also driving the buy-sell market, because economies of scale make larger buyers more profitable with specific dealerships, so they can pay more and get people out who are facing, tougher times.
Sure. How do the current situations that we see in the current environment affect valuations?
Like I said before, one has to look past what's going on now and sort of view what you think the world is going to be like in the future.
Yeah.
And if you're confident in your opportunities and your ability to operate a business, you're still going to be buying dealerships. Now, obviously, every buyer in a situation is going to use that as an excuse to try to cut the price, but that's a negotiation.
Yeah, for sure. Isn't referring to today's uncertainty over tariffs more than a market distortion?
I think it is. It's not more. It's that distortion is happening. We don't know how the tariffs are going to come across. You saw today that Trump, adjusted them again. Market realities, China, the whole world is going to make these adjustments so that everybody can be profitable.
Right.
So, yes, they are distortions, and they may lead to permanent changes. But really, nobody can predict what those permanent changes are yet.
That's right. Yeah. And again, so many dealers that I've spoken to have said it's only 100 days, in the big picture of things, to turn this huge ship around is going to take a lot more than 100 days. And maybe we shouldn't be judging it, in the first quarter of this game.
Well, what I think the administration is learning is this is a lot more complicated problem than they thought it was originally.
Right.
I saw today when they were laying out all the parts of a transmission, just the transmission, and where everything came from.
Yeah.
How do you figure out the tariffs? And then all of a sudden, you got the Canadian tariffs on top of the drug tariffs on top of this. It's going to have to rationalize. Maybe I'm being a little bit too critical, but unfortunately or fortunately, A lot of the president's advisors never actually built anything. They're all financial people.
That's right.
So as you learn how things are built, that's going to change your view of things.
That's right. That's right. So the supply of dealerships coming to market will not diminish. Will buyers defer purchases to wait for more stable economic times, do you think?
No, I don't think so, because we're working on a lot of deals now where they're not. You have to remember, these are long-term assets. Something comes to market that a buyer has been coveting for years. If he doesn't move now, he may not have another shot at that dealership for 20 years.
Yeah.
So while you'd like the perfect storm, it never happens. If something comes up that you want, you know, if that Porsche dealership or that Toyota dealership that you've been wanting for 20 years all of a sudden comes up because your competitor is retiring,
Yeah.
you don't want some 30-year-old buying it because you'll never see it again.
That's right. That's right. Yeah, that's a very good point. What about pricing today?
Pricing's always a conversation. I don't see pricing weakening that much. Like I said, you can't let short-term distortions or events affect how you think this thing is going to earn in the long run. I mean, you can even look at the public car dealerships, and the pricing on public car dealerships is a lot more volatile than dealerships because people can get in and out. You can see the prices have held up pretty well.
Yeah.
And the blue sky multiples on those on the public companies are probably in the 8 to 10 range.
Yeah.
So it's not like they're being given away either.
That's right. That's right. Yeah, for sure. So, I mean, the current events, it doesn't have much of an impact on pricing?
It does, but not explicitly.
Okay.
If somebody comes to market with a good deal, they're not under pressure to sell it. If they don't get the price they want and they think the world's going to be better tomorrow, they'll just pull it out of the marketplace. So if you want it, you got to make your move. One of the things I noticed is that when you're in negotiations, a lot of times they argue over the last nickel.
Yeah.
When you look down the road 10 years, whether or not the deal was successful had nothing to do with that little 5% going either way. It was either successful or you either are successful or you're not. So a lot of that precision may fall away over time.
Yeah, for sure. I interviewed Senator Bernie Moreno, and he said that in a year's time, that this is a blip on the radar, and in a year's time, we won't even be thinking about this.
I think we would, I love Bernie, not to disagree with him, but when you're at a cocktail party a year and a half from now, just like people talk about the Great Recession, people will be talking about war stories and about what they did. But the common theme, I believe, will be what they did to overcome it.
Yeah.
And like I said, this is a great business. It's been a great business for 100 years. One of the things about automotive retailing is it's different than other retailing. If you think about it, in a lot of different ways, and there's an expertise that other retailers don't have. Now, let me give you an example. When I go to Home Depot and I buy a hammer, right? I pay the price. I don't negotiate it, but I don't trade in another hammer, and I don't try to finance the hammer. I just buy the hammer.
It's a good point.
All those things are complicated issues that dealers have to deal with. How do you get somebody out of a car? How do you put them into a car that they want? Other retailers don't deal with this. You have to remember, a car is the second largest purchase in somebody's life.
Yeah.
And it's not something, as much as people want to say it's going to be online, when I spend $50,000 for something, I want to touch it. I want to drive it. I want to see if it works for me.
Right.
It's not like if I screw up like a toaster, I can just buy another toaster and, throw the other one in the trash.
Right.
Different business.
Yep. It's a very good point. Very good point. How's all this affected the way that you guys value dealerships?
Well, the way we value dealerships are, when you're on the phone and you're talking to somebody, the first question they ask is what franchise. The second question they ask is where is it?
Yeah.
And from our perspective, that's just a proxy for asking what's the earnings potential, what's the growth potential, and what is the opportunity, what's the risk of reaching those goals? So what we've done is we've done some modeling where we break those things out so we can identify those issues so that when people come to the table, the issues are known and people can know what's in front, and then the groups can talk to each other and they're more likely to get a deal done.
Right.
Obviously, transparency is what works the best because once trust is lost in a negotiation, it's very tough to bring it back.
Yeah, yeah, no question about it. But that being said, your phone's still ringing for
Oh, yeah.
deals to be made.
Not only are deals to be made, not only the phones are ringing on both sides, buyers and sellers. Also, it's also like a house in some sense. People are just calling up to find out what it's worth,
Yeah.
so they can make a proper decision
Right.
or figure out how does it fit. The other point is that during this time, people are doing their estate plan,
Yeah.
and people want the valuations for their estate plan, how to divide it up. All these things are happening, so the phones are ringing every day, every hour.
For sure. I think I asked you this last time that we met, and that was about Stellantis. Coming back strong, or is it still a troubled dealership, or what's your take on that?
Well, I've been visiting some Stellantis dealerships, and I judge the health of a dealership in a very great sense on how much inventory is on the ground. Because if you know how much inventory is on the ground, you can get a sense of what the grosses are. And inventory is still too high.
Yeah. No question.
And the other thing which I'd like to mention is that the health of a franchise, a lot of it's reliant on the factories. I mean, if everybody wants great margins, just tell the factories to create exciting product that people want.
I heard from a friend of mine in the industry that owns a Audi dealership today, and he said that Audi is putting out among the dealers that they will sell the vehicles at MSRP to the dealers, and they want them to sell them at MSRP. They would like them to, but then they would kick back 7.5% to those dealers every time that each car is RDR'd. A, have you heard anything like that? And B, how does that, is that more of an agency model that Audi might be after, like the way we see some of the brands selling cars in Europe?
Yeah, it could be a move to an agency model, but you have to remember, my understanding of an agency model is the manufacturer doesn't require you to do CapEx, doesn't require you to do a lot of the other business things, and Audi's not walking away from that. I'm sure they're not opening up their checkbook when they say they want a $20 million new facility. I mean, let's be honest here.
That's right.
I mean, the dealers provide capital to the manufacturers, and given what their product cadence is that good for the dealers? A guaranteed 7.5% plus the F&I plus the doc fees.
Yeah,
that's not a bad deal.
That's right. That's what he said. So when he told me about it,
it also reduces your risk. I'm not negotiating for the price. So, if the economy turns down and, a lot of people are projecting a decline in the economy, typically during that period, grosses collapse. If grosses aren't collapsing, I'm a happy man.
That's right. No question about it. Hottest areas of the country for dealers that they want. Is it still Florida and Texas and Nevada and?
It's Florida and Texas because no income tax and the states are growing. People, I saw a statistic that like Dallas grew by 60% over the past 10 years or something. Some huge number.
Yeah.
If you try to drive in Florida today, you're stuck in traffic. It's almost like Manhattan. So, that's where people want to be.
Yeah.
Because, you can talk about multiples, but I'm willing to pay a higher multiple in Florida because A, it's growing, and B, I keep more of my money.
That's right.
So why don't I want to be there?
Yeah.
Plus, the dealerships tend to be larger, and larger dealerships, you can put a better GM in, you can pay them more, they can become more efficient. So there's a lot of things pointing, and I don't think that there's any weakness happening in Florida.
That's right. I agree. Todd Berko, co-managing partner at Bel Air Partners. Again, thank you so much for spending some time with us here at CBT News. I know that our dealer viewers get a lot out of your visit with us, so thank you so much. And for the dealers that are out there that want to learn more about maybe the value of your dealership right now or what's happening in the marketplace, give Todd a call, and I'm sure that he'll be happy to help you navigate that. So, Todd, thank you so much.
I'd love to.
Thanks so much.
Thank you very much. Thanks for your time.
Absolutely.